The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome all to another edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, David White. We meet yet again on a day where the market showing a little bit of weakness, as they say sometimes on the trading floor, showing a little bit of leg out here. And we'll find out whether or not it's going to do anything. We are off 11 points on the S&P cash, turning just a little over 2 billion shares on the consolidated New York Stock Exchange tape. And a little interesting. I know a lot of technical analysts would probably be saying anything below 1795 for a close today would be fairly important. I have a feeling it has a lot more to do with the advanced decline line than it has to do with any particular spec number. But we'll take it. A win is a win. I am short in my daily newsletter. And looking for opportunities in the Tech Insider. They seem to be rather far and few between at the moment, but I was been waiting for a market turn to get a couple of positions that looked pretty tasty, and we'll see how it goes here. At least on the positive side of both of them at the moment, so that's probably the good thing. But not a lot of volume. Now, we've got a few things happening this week that will probably be bearish for the market, and we'll get into that in just a few minutes. But off 10 points on the S&P, 11 points on the S&P cash, and volume a little bit better than yesterday already. So what did we happen? Well, on this day in 1777, the U.S. borrows money from a foreign government for the first time. Boy, it didn't take us a year to borrow that money. Continental Congress authorized Benjamin Franklin and American commissioners to France to obtain a loan of 2 million pounds from the French monarchy. So, wasn't very long before we were already, I guess we're a nation of borrowers. But it didn't take very long. Probably the more exciting thing that happened on this day was in 1963. American Express Warehousing Limited, it was a division of American Express, declared bankruptcy after storage tanks in New Jersey that were supposed to contain $150 million worth of salad oil turned out to be holding nothing more than seawater. The man behind this was Anthony Tino DeAngelis, borrowed millions of dollars using the non-existent oil as collateral, leaving Amex on the hook, and the stock skidded from 60 to 35 bucks. Warren Buffett bought it down at the lows, and within 4 years had a 150% profit. Now, this is in the 60s, remember, where stocks weren't really moving that much. And one of the things that truly made Buffett in his early days, before the whole Berkshire Hathaway cachet of juice that pushes him around today, but kind of interesting to see that even back then he was waiting for values to show up, and a value investor. We've been talking a little bit, I think about a week, 10 days ago, about Bloomberg spiking a story about a Chinese millionaire who also had very close ties to the Chinese government. Of course, you only become a journalist in China if they like what you write. If they don't, you either disappear or get sent back to your host country. What a lot of people didn't like was that the gentleman that wrote the story thought he had more than enough sources to report this story. So they spiked the story. He talked about it. They fired him or put him on leave, depending on who you believe. But because that finally ended up making its way into the press, the Chinese have been visiting Bloomberg's office and going to continue to be well, they're calling it unannounced inspections at Bloomberg News. But if you're investing in Chinese companies, know one thing. That is that the truth is not allowed at any cost in China. And if you're believing anything that's going on over there, just remember it's only through the auspices of the Chinese government that they want you to see it. But what can you say? I don't know if a little bad news that they want to tell us is any better than no news from those countries at all. We talked about this in the den a little bit last night. That is that the Supreme Court of the United States declined to hear petitions from Amazon.com and Overstock.com requesting the decision by the New York State Supreme Court permitting the state's 2008 law requiring sales taxes be collected. Steve Rhodes got in on this and said that it is because they had people in that state actually writing on blogs, and therefore they had employees in the state. Therefore, New York was they deserved the sales taxes in that state because of the 3 or 4 employees that they actually had in New York. Anybody that's ever lived in New York knows that and made any kind of money that has ever moved out of state will know that New York still claims that because you were in New York, you made all your money because of them, and therefore even after you leave the state, they will hound you to no end to get additional money from you. But you'll know that. But that's pretty much the end of it. Looks like they're going to continue to collect sales tax. And one of the big advantages of Amazon is going away, and that is the ability to sell into states and not collect sales tax. Normally when I'm buying computer parts or technology, I have a choice of 2 companies. One is called Tiger Direct. The other one is called Newegg. Newegg doesn't charge me sales tax. Tiger Direct does. Guess which one I will opt out for, all things being equal? Pretty easy to figure out. I think I'm like most people out there. I don't think I'm dying to pay sales tax from out-of-state businesses. Kind of interesting article. The only reason I bring this up is I think it is going to have a big impact on the markets next year. And what we did find out is that one of the gentlemen complaining about Obamacare getting canceled because he had cancer, not being able to get a new policy right away, was complained a lot on November 7th. Or I think on Wednesday or Thursday last week, found out that he is now being investigated and audited by the IRS. This pattern of criminal behavior has continued, even though they got their hands caught in the cookie jar. Looks like nobody really cares. But do not talk out about the powers that be in the White House now, lest you find yourself on the wrong end of the IRS. Of course, it's pretty well documented now that at least 2 or 3 people in the current administration are facing what will be lifetime sentences for giving tax information to political allies to be used against them. They were stupid enough to use Google and email it to them, so it has been found. My belief is that if we think that the rancor on in Washington is at a fever pitch now, I think it's going full tilt, probably leprosy next year. or some other horrible disease, as this is going to fire up and be probably one of the big things of the next 6 months. Of course, Republicans are going to use it to beat everybody over the head all the way through the elections cycle next year. And, of course, for the most part, one party is trying to bury it. Interestingly enough, the House's chief investigator says the FBI is stonewalling all their inquiries, whether the agency Internal Revenue Service targeted a specific conservative group, True the Vote, for special scrutiny. They are now threatening subpoenas to pry loose the information from the FBI, but Director James Comey is acting just about like the rest of them. They've been able to dig through a great deal of the information on themselves, but whether you believe or disbelieve, probably not an issue. I suspect what I'm talking about here is a huge issue that is going to be on the front pages. Probably, I would say, starting. I'm thinking that right after the Winter Olympics, we're probably going to see hearings start on this, and the question is whether or not someone facing a life sentence is going to roll on their superiors. I'm suspecting that there are more than 3 people that are going to be implicated in this, and whether or not the FBI and the rest of the Justice Department can stonewall on. You sent tax returns of individuals to people in the White House. You've got the copies of those emails. It's not real hard to tell. Each one of those carries 5 years, and there's 30 or 40 of them. This could end up being kind of a problem. I'm pretty sure that they distance themselves to the president himself. But I imagine that this is going to be one of those things that just does not go away, and we're going to be seeing a lot of rancor next year, especially going into debt and debt limit negotiations next year. I'm looking for kind of a tough time, at least politically, through the first half, if not into the elections next year. Tesla had a nice bounce today, and part of it's being put on the German Federal Motor Transportation Authority. They cleared the Model S, and of course everybody, well, that's cool. They checked it all out, and we really don't need to change anything. The feds here decided not to go and investigate the 3 fires in the cars that are available, and for the most part, probably the right decision. This is being looked at on the street as an endorsement of the car. It's just saying they didn't find anything that is particularly weird or obnoxious. But probably the big thing out there is there's an organized party pushing Tesla up today, probably catching a lot of shorts. Morgan Stanley upgrading it. I don't hear any background music. Oh, there it is. We'll be back in just a minute. You can always give me a call at 877.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Down in the S&P cash, but what can you say? We're looking at going on about 2.2 billion shares. So volume is picking up a little bit on the New York Stock Exchange tape. If you're new to the show, I pretty much always quote the consolidated tape, which is the New York Stock Exchange shares traded across the floor, all those are traded on the ECNs, plus all the Amex shares, and probably I kind of like it a little bit better than just the floor-traded New York Stock Exchange shares, but a little easier to get and always free, which is a plus out there. But what are we off? Yeah, almost off 12 points on the S&P cash. What will be very interesting is the close today. What we've been noticing, and some of the better floor traders on the New York Stock Exchange have been talking about over the last week is starting to see a little bit of selling at the very end of the day. The old saying is that the open belongs to the newbies, the wannabes, and the close belongs to the pros. And there is a little bit of that in the thinking that a lot of people on the street will watch a stock trade all day and make the decision at the end of the day instead of jumping in. They like to get a little bit more of the character, make sure nothing changes, and then put an order for market on close and take what they will. A lot of shares are traded now in dark pools where they physically only get counted close to the end of the day also, which is part of it. But probably the more interesting thing for most people are going to be closes and numbers for the Dow. Looks like we're easily going to close under 16,000 on the Dow. Looks like we're going to close under maybe not. I would say that there's a good indication right now that if we have any selling at all, that we might lose 4,000 on the NASDAQ also. So we'll be watching those fairly closely. We're talking about Tesla when I left before the break. And one of the last things I wanted to bring up is that Tesla works and makes a lot of money as a car manufacturer because they don't have the traditional expenses like dealers and other things like that. They've already had several places where the local car dealers are trying to keep them out. In Ohio, it is probably gotten as vicious as possible. They are pretty much drawn a line in the sand showing that they are not going to let Tesla into Ohio unless they have car dealers and all the traditional trappings of a car manufacturer, parts depots, all the other kind of stuff. Kind of interesting, but at the same time, it really looks to me like a short squeeze in Tesla once again. Maybe getting a little higher out here, you might be able to actually get it. A couple of things going on with Bitcoin. If you missed our conversation, I think it's still in the archives. 2 weeks ago on a Friday, we went into a great deal of detail about Bitcoin. We brought up one thing, and that is that people manufacturing specialty computers to mine the Bitcoins are some of the people that are making the most money out of it. The KNC Miner company in Stockholm sold 8 million worth of their new 10,000 a pop Bitcoin computer miners in 24 hours Wednesday before Thanksgiving. And they're not going to even get them delivered till January. So the whole idea that the people selling the picks and shovels are probably the people that are going to end up with all the money at the end, probably still coming along. At the same time, there is a bunch of people trying to get back about $10 million from a company that was kind of an exchange for Bitcoin. Somebody figured out how to rip them off and take, at the current price, about $10 million. But they've been working very hard going through the public register for transactions and following that money. And why there are several ways to try to launder that money. It's actually fairly hard, but there is a list of these what are known as Bitcoin addresses. And if you look next to some of them, you're going to see an actual name, and it will say something in there actually about sheep market scam. And that's actually people following those blocks where the money goes. So why it's transparent, not totally transparent if you know what you're doing. Anyway, they're trying to get their $10 million back. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we come back. One of the other things probably making a little bit of news before we get into charts today are that there was an article coming out about a pilot that flew a metallurgist to China. And he, for some reason, they didn't bother stopping him. This guy went in to look at some metal, and what he was in was a giant warehouse that had a giant 747 torn apart, and they were basically copying every part in it. Looks like the Chinese are going to try to get into the Boeing 747 business. Why this is probably a little upsetting at the beginning. There's a great deal more than just knowing the parts. You have to know why they're built out of certain parts. You have to know the actual metal, which is why the metallurgist was there. But you can kind of guess at a lot of those things. You're not going to actually be the same. But it looks like kind of interesting that the Chinese are really getting into copying just about everything, including the 747s. According, of course, Boeing is much more than just a manufacturer of a airliner. If you need a part, you can get it pretty much within 12 hours anywhere at any major airport in the world. And of course, if you got a bunch of stuff sitting there and you spend that much money for a plane, kind of tough to let it just sit on the sidelines, not making any money. So I don't know if Boeing really has that much to worry about. Plus, Chinese are pretty noticeable about buying substandard parts. I'm just wondering how many of these things are going to end up being long darts if they actually ever go into production on these. But interesting article. GameStop. GameStop was down today, declined a little bit over 2 cents. Symbol is a GME. I've been talking about this one for a while, probably the equivalent of Barnes & Noble and Borders Books, but pretty much saying what everybody already knew. This thing took a big header earlier in the year when I said that Microsoft was going to get out of the business of actually selling software via retail channels. You were just going to download it from them, and that was pretty much going to be it. Everybody squealed, pitched a fit, and Microsoft, for the moment, has recanted that. I suspect that they're just going to come back a little bit later. It's only a matter of time. Being able to actually have a hard copy in your hand, probably not a big deal. And Microsoft doesn't like the split. If they sell a game or a percentage of games, much tougher to take that 25% or maybe 20% hit that they get when they sell to Walmart that they could just keep. Same thing with used games. They wanted to put GameStop out of business, and why Sony may still be enough of a business for them to stay around for a little while. I suspect it's just a little while before we find out that they're going down the same road that the paper manufacturers of books went down compared to all the e-readers and everything else we have there. But I think we're seeing the beginning of the end. I would say that they have somewhere between 2.5 years left before they close the door, but that's I think it's an educated guess. Crude was up today. The Trans-Canadian pipeline that's Cushing to Port Arthur, Texas, is expected to be completed in about a month. And we're also looking for numbers that look like the largest drawdown in several years. Same thing in natural gas. They're looking forward to the largest drawdown expected for the last 6 years on lower temperatures. So we're going to have a lot of energy news coming out. Of course, after this show, Andy Heck, my stalker, on Tuesdays and Thursdays. Maybe he's going to talk a little bit about that. Krispy Kreme kind of got blown apart today also. KKD shares plunged after the chain issued a weak outlook Monday. It sees a full year 2015 EPSs of 71 to 76 cents, below the street view of 77 cents. One of the bigger and well-known shorters, Whitney Tilson, pretty much out of the school of Buffett, finding value. Going to be talking extensively at the Harvard Business School tomorrow about a great many stocks that he finds short targets at the moment, and really looking at DDD, SSYS, and some of the other 3D companies out here, but might see a little bit more action on those tomorrow as he comes out and says that he's going to show the thesis of why these stocks probably are in bubbles. The Belgian Supreme Court ruled that Herbalife complies with all its laws. That was enough for it to bounce about $3 today. Of course, we still have a huge short side to this particular trade. Is the company anywhere close to the price it's selling for today? The answer is no. Eventually, this is going to be one of the best shorts of all time, probably after they run the existing shorts out and they're all fighting to get their money. This thing probably going to be a rocket down one day. I believe that it is some kind of pyramid scheme in that only about 5% of people that get involved with it ever make any money, and only about 20% of the products actually are used by people outside of the company. But for the moment, a great short squeeze going on and going after particular people. At the beginning of the show, I said that we're probably going to have some bearish news this week. Starting tomorrow, we have Lacker, Fisher, and Foster, all the hawks on the Fed, will all be talking this week. So look for probably a lot of discussions about tapering sooner rather than later. And, of course, jobs numbers on Friday. And they're expected, at least the inputs are starting to look fairly strong. And that will probably also be in the tapering discussion. Did see some economists fighting and talking about just how much lower interest rates are as a percentage of income for these companies. And they argued up and down, but it seems anywhere from 25% to 33% of the income for these companies is artificially low interest rates. If they were allowed to pretty much float to where their natural supply and demand would take them, you'd lop off about a third of earnings. And a lot of people are thinking that as the Fed exits, we are going to see interest rates move to their fair market levels, which could be a problem. Now, the Fed says they're going to keep them low, but it looks like the bonds and the bond folks out there are getting way out in front of the Fed already, and we're probably going to look at that. And, of course, I talked about Andy. Maybe he's listening already. I don't know if he's in here already, but if he is, I want to find out more about this exploding pig poop. Apparently, there's some kind of foam now in the pig poop that holds up and starts to accumulate all the methane gas in the pig poop. And apparently, these pig poop farms are exploding, killing thousands of hogs. And why this is rare, they think it's kind of becoming, if they can't figure out why this foam is happening that holds all the methane, they're expecting more and more. I don't know if Andy gets into exploding pigs, but kind of piqued my interest out here. Huawei is exiting the U.S. market. We brought this up 4 or 5 months ago. When the president actually said that this company was actively engaging in espionage for the Chinese and designing backdoors into their routers and other equipment. Today, the CEO said they're throwing in the towel stateside and getting out of the United States after the president basically said these guys were agents of the Chi-Coms, Chinese communists, for those people in Lutz. It is pretty much a given, I think, that from what other people said, that these routers were nothing but tools of the Chi-Coms to get into everybody's business already. And they're at least done in the United States, probably going to be done in Europe. There's more discussion about whether they're going to even be able to sell their products over there. Interestingly enough. Anyway, I had some people discussing some charts in the den. LRXS, so we'll take a quick look at that. You can always give me a call at 877-927-6648. LRCX. Take a look at that. That's interesting. Lam Research Corporation. I'd forgotten the ticker. I hadn't looked at this one in a while. This thing bounced off pretty much right at confluence. Not exactly sure what they're looking at here other than maybe a possible test of the 618 retracement, which is pretty close. Maybe an ABC down. Could be. Looks like this. If the market did fail, probably looking at as much as 43 on the downside, but probably between now and Christmas, 49.54 would probably be the bottom of support. Nice day today on a down day, decent volume, but your risk is probably down to 49.74, so not a bad play out here. I'm not one to be very long in this market, but interestingly enough, We'll find out. Oh, I got a question from our engineer. He says, "What are the farmers feeding the hogs?" Apparently, it's the reason they think it's some kind of combination of the hormones, growth hormones, that they're feeding these pigs. That's what they think it is, but they haven't proved it yet. Lambs research, nice move out here, but still at what would certainly be the just above the 53.20 would be the 618 mark on this, and I don't know. I don't like particularly like the market. But this is Fin TV. Not affecting, but could. Okay, Andy's probably going to talk about it during his show. Just a little message in the den here. Anyway, I wanted to look at some other charts of interest, so let's get into that. I wanted to look at these gold charts. Of course, gold not moving much today. Yamana Gold is one of these ones that is down lower. They broke down with 9.2 million shares. That is still lighter than the 855 from June 26 that had 10 million shares. And, of course, lighter volume out here today. What you would be looking for in a lot of these is a close back above these previous lows on lighter volume. 5.7 million shares, probably pretty good today, as long as it comes in by the end of the day. One of the things you should notice is that a lot of these gold stocks are going to have a very clear and definable levels of confluence on the way back up. In this case, a very easy one to see out here, which is pretty much at $9.62. And we're going to see others in that gold space probably having the same thing. So just be very wary if you're playing these on the bounce, what you're going to have. Another one, if you want to look at it and go back through the confluence, I know you've all read Tom's book about confluence and setting up confluence. It's nothing more than two Fibonacci retracement levels where they agree between the 382 of one and the 618 of the other. Goldcorp is another one that is very clean out here for levels of confluence on the way back up. On this case, it's 2489 to 2510. That's like a 20-cent range there. So if we do start getting bounces on these things, if they don't have a huge amount of energy when they come out, this is probably going to be the natural place. Not a bad thing if you had the low today at 2074. Not a bad trade up to $25. But I think maybe we're going to get a little bit more push as we go into the weekend, and especially with these Fed hawks out this week could be interesting, or a little more interesting. But this was a good example of where we're going to start finding resistance levels on the way back up in these stocks. So I know everybody is looking to get back into gold and gold miners, but interestingly enough, place to look. TPX, Tempur-Pedic. This is one that is confirmed a sell pattern. These things kind of got blown apart earlier in the year. We'll talk a little bit more about it, but I think we're probably getting close to these mattress companies probably finding a high. We'll be back in a second.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Hornet's Nest talking about the pig poop problem, and we're gonna find out a little bit more. I said we should just go to Soylent Green. Don't you miss those really horrible movies from the late 60s, early 70s where the end of the world always happened? Soylent Green was the best. If you never saw the Charlton Heston overacting school, always the best. Soylent Green is people or Soylent Green. Anyway, you have to see that movie. There was always these horrible end of the world things, but haven't come to a pass just yet. It's a pretty terrible movie, our engineer says, but actually just watching it's still pretty good. Watched a great movie last night called The Best Worst Movie. If it's a documentary on Netflix if you get a chance to watch it. Anyway, when we're looking at a lot of these charts, seeing a lot of these charts hit these highs. I brought this one up yesterday as a pretty good example of testing highs on very light volume, and it did confirm today. That is the March 27th high at $51.02. It had 3.2 million shares. This is a Tempur-Pedic TPX. This one came in with 1 million shares yesterday, 51.84. So it went above it. It closed below it, and it continued today, but looks like it's going to go back into this gap somewhere between $44 and a little under $41. We got a couple of minutes going on here, so let's check just real quick and see. For some reason, I'm getting spurious time stamps on my market calls. Okay. So we're off 8 points on the S&P cash. At least that's what it's saying. 2.36 billion shares on the consolidated tape. So, I don't know. It looks to me like they're going to try to push this thing up into the close. But again, the last 30 minutes are all what's this about. And kind of hard to see. Tesla up $19. Anyway, wanted to look at a couple others out here. KEG is another one. I've got plenty of time for this one. Maybe that wasn't the one I wanted to look at. Oh, McGraw-Hill Financial. I think we brought this up too yesterday. MHFI, another one making a fairly clear indication of hitting its highs and hitting the wall. October 24th high. $74.34, 2.4 million shares. Got into it with 1.4 million shares a few days ago, and this thing pretty much and conceivably closing back under the previous high, which is a good sell signal, and starting to see some more weakness. The confluence levels on this are a little bit wider, so probably not as important, but seeing a lot of these stocks kind of tap out. And we're probably going to see less selling in these kind of stocks in ones that have already started to sell off. Probably going to see a lot of people racing to the exits on any stock that they can sell for a loss between now and the end of the year. So look for some stocks kind of like Tesla that were up high, that are making a move again. And before the end of the year, maybe a lot of these funds are going to try to exit stage left. Stocks that are holding, 52-week or all-time highs, probably not the ideal candidates. Stocks that have sold off from recent highs, probably a better indication of people wanting to take their money. Anyway, following me, we've got Andy Heck starting in just a few minutes. But you can always catch me, same channel, same bat time. And remember, sell when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.